Why do people still do adjustable rate mortgages?
I think, and a lot of our loans now are 30 or 40-year fixed. And they'll have a 10-year interest only option, but then goes to, so if you have a 30-year with a 10-year, then you go to a 20-year AM after the 10-year interest only is over, right?
On the same rate or adjustable?
On the same rate.
So the rate never moves?
Yeah. So a lot of these products that we do in non-QM, 40 years is even better because then it goes to a 30-year AM after you get your 10-year interest. So it's
gorgeous.
If you're a non-QM guy and you got that rate and you got that product, you're set. Like you don't need to do anything with it, right?
So if I bought a house in 21 when the rate was 2.75 and I did a 10-year IO with 40-year term, after that 120th payment, my 2.75 stays.
Yep.
It just converts into a P&I
30-year fixed.
And then you pay it off for those 30 years.
Yep.
You guys are doing a lot of those?
We did a lot of those.
That's
and
a beautiful
we still
product.
are doing it. But the argument for adjustable rate mortgages
Please.
is predicated upon your average homeowner refinances every 5 years or less. Historically, they refinance within 2 to 5 years.
Yeah.
So the idea for doing an interest-only ARM is that you get to use that money, instead of paying down a principal, you get to use that money today versus later when you either refi or you sell it. You're getting like a lower payment. Also, that's the same argument for should I impound my taxes and insurance or should I pay them separately? Same argument, I can use that money today.
Right.
So it's more risky in a sense because what if you're putting that into an investment, right? Or you're putting that into something, putting it to work for you, where instead you're just giving it to someone else to hold on to pay your escrows or to pay your taxes or your insurance, right?
Right.
So you're not making any money off that money, but maybe that's, depending on how big it is, it could be meaningful. So if you're going to refinance, sell, or if you know this isn't your forever home and you know you're not going to keep it and then turn it into a rental, then an IO 5-year ARM, 7-year ARM. 7-year ARMs are better, obviously, because it gives you a little more buffer if you know within 5 years the average.
Yeah.
The other thing is, if you're buying a home, like I think today in today's market, hindsight, it would have been the smartest move to probably do, and I think a lot of people did it, got 30-year fixed. I think there was a lot of like First Republic loans that were made with 10-year IOs or 7-year IOs. A lot of the more community banks did the ARM loans versus 30-year fixed because they don't sell it off to Fannie, they don't sell it off to hedge funds. They keep and they portfolio it. I mean, if you have the option to do a 30-year with a 10-year IO, then that's way better.
Right.
Rate's not that much different because the differential on the 5 versus the 10 versus all those factor in that, the rate was almost the same. And so I think ARMs were more important and more beneficial throughout history when they were much lower than a 30-year fixed. Now it's like, why not you just get a 30-year fixed? But sometimes you can't, a business owner and you went to First Republic or one of these guys, they didn't probably even offer that, but you're like, well, I'm going to probably do something with it in the next 4 or 5 years anyway. So I'll take the 5-1 ARM, the 7-1 ARM. And now, luckily I did them in late 21. And so I've got 7s. So they're probably not coming due till 29, they're going to be a shift. So, you get some time, but it's always in the back of your head. Like, is that going to be a problem?
Yeah.